Okay, welcome everybody. Thank you for being here today. Before we start, I just want to say, in the name of everybody here, that we extend our deepest condolences to the families who have lost loved ones in Israel. May their memory be for a blessing. We wish to tell those that have been injured, refuah shlema, complete recovery, and we pray for the safe return of every hostage and every soldier defending the state of Israel. My name is Amy Kaufman, and before I let Brian start with his part, I just want to give a brief introduction of who Israel Investment Advisors are and just a little bit of details about how this will work. Brian will be talking, and if you have a pressing question, feel free to write it in the Q&A section or in the chat section. We will be following and checking on that, but we will have a session at the end for Q&A. Israel Investment Advisors was established in 2010. IIA, as we call it, is the general partner of our Israel Investment Fund LP. This fund is an actively managed Israeli stock portfolio focused on long-term growth. We invest in profitable companies with strong balance sheets and reasonable valuations. Our main focus is on Israel more as a scale-up nation as opposed to just the startup nation. We work and concentrate continuously on research, consulting, and advisory into the Israeli economy and the investment landscape. Brian Friedman is our Chief Investment Officer and Portfolio Manager and will be in charge of the presentation today. If you have any interest in finding more information about us, feel free to contact me directly, and you can find my contact information in our website, and there's plenty of information there to get you started at israelinvestmentadvisors.com. And with that, Brian, go ahead, take us from here.
Amy, thank you very much. Thank you for joining us. Thank you to our investors. Thank you to our guests. This has been an incredibly difficult time for everybody, but most particularly for people in Israel. On October 7th, Israel suffered the worst terrorist attack in its history, and it has absolutely no choice but to go after the barbaric criminals who murdered 1,200 innocent Israelis, took captive 240. Thankfully, some of those have now come home. Israel did not ask for this war, but it is fighting this war. We are going to discuss the economic and financial aspects of the current conflict, what the implications are for the long-term future, and to what degree Israel's financial firepower will play a critical and probably decisive role in winning this war, as well as winning the peace that is hopefully to come. Let's start here. This is a chart that the IDF put out a few weeks ago to explain the history of Gaza since Hamas took over in 2007. Since 2007, every few years, Hamas has launched an escalation of the conflict. Now, clearly, there has been regular and continuous threat, rocket fire, other attempted infiltrations, terrorist attacks, above all else, as I just mentioned, rocket fire all the time. But over the years, there has been periods of escalation resulting in Israeli operations. Operation Cast Lead in 2008, Operation Pillar of Defense in 2012, Operation Protective Edge, the biggest operation prior to the current Swords of Iron operation. And then, of course, 2 years ago, Operation Guardian of the Walls. From my vantage point, from our vantage point here at Israel Investment Advisors, It seems to us, and it seems to me, that the objective of Hamas and its partners in the so-called axis of resistance, Hezbollah, Iran as the ultimate funding source, the ultimate power behind much of this activity. Apparently now the Houthis in Yemen. What is their objective? By my way of thinking, the objective is to make Israeli Jews feel that Israel is a dangerous place to live, that it is not the safe haven for the Jewish people, that the economy cannot thrive and prosper. They want to destabilize the economy. They want to shake Jewish confidence in the state of Israel and ultimately motivate millions of Jews to leave. They know that they cannot win a war in the short run, that Israel cannot be defeated militarily in one decisive war or battle. But they do believe that confidence can be shaken and faith can be eroded over the long run, forcing Israel to weaken steadily, and that they will achieve their objective in that manner. So, as a result, we believe that security and prosperity are victories in and of themselves. A prosperous Israel, a secure Israel, is an Israel that wins. And we're going to discuss why we believe that a secure and prosperous Israel will be the outcome of this conflict. It has been the outcome of the conflict over Israel's first 75 years of history, and that Israel, despite, from Hamas's point of view, losing a battle, that's what Hamas believes, that on October 7th, they defeated Israel in battle, set Israel back, advanced their objectives. Even if they won that battle in their eyes, they will not win the war. They will not win the current hot war, nor will they win the long-term war for, from their vantage point, insecurity and degradation. We're going to talk today why that is the case and what role Israel's economic might and financial firepower will play. Firstly, if Hamas, Iran, Hezbollah wants to see Jews leave Israel, and the other terrorist groups want to shake confidence in Israel as a safe haven, they have not been succeeding very well over the last number of decades. If I go back to the Second Intifada in the early 2000s, there were 6.5 million Israelis. Today, there are actually about 9.7 million Israelis. More than 7 million of them are Jews. Israel has the fastest population growth in the developed world, not just because of Orthodox Jews. Population growth is higher than in any other developed country for all segments of the Israeli population. Religious, traditional, secular, yes, Arabs too, but even in that front, the demographic so-called threat from Arab Israelis is also significantly moderated, as their birth rate is now somewhat similar to non-Orthodox Jews. Even the Orthodox Jews are not growing quite as rapidly as people believe relative to other non-Orthodox Jews. The demographic picture in Israel has been robust for decades. It will continue to be robust. And I wanted to start with that fundamental point, because if the objective of the axis of resistance, the terrorists of Hamas, is to diminish the Jewish population in Israel, they are failing miserably. let's talk about Israel's economic growth and its prosperity. Once again, the chart you see in front of you goes back 40 years. And I wanted to start 40 years ago because Israel back in the 1980s was mired in debt. It was stuck in a long, protracted, expensive conflict in Lebanon. It ran a socialist, government-dominated economy, and it got into some deep, hot water. Government debt in the early 80s was more than 250% of gross domestic product, GDP. The Israeli economy back in the early 80s, in current dollars, meaning 1983 dollars, was $30 billion. If I translate that to 2023, that's a little bit less than $100 billion. So the Israeli economy has grown more than fivefold over the last 40 years. And because of this growth, because of its transition from socialism to capitalism, and because Israel got its fiscal house in order, Israel's debt burden, its debt to GDP, fell from 250% back in the early 80s steadily to 60% today. To put that into perspective, Israel is one of the least indebted developed economies in the world. A debt to GDP ratio of 60% compares to the United States of 100%, meaning Israel's indebtedness, its government indebtedness, is 40 percentage points lower than the United States. Its economy is now $525 billion. And as a result, it has the capacity, if necessary, to borrow vast funds if it needs to fight this war, to improve its defenses, and maintain prosperity and growth for its people. To put it into perspective, if you think about the differential in debt between the United States at 100% of GDP versus Israel, if Israel were to borrow an equivalent percentage, hopefully it won't need to, but if it did, that gives Israel $200 billion of potential credit that it can tap. $200 billion. To put it into perspective, the Israeli defense budget over the last 12 months was $23 billion. It can spend, if necessary, and I do not believe it will be necessary, 10 times its current defense spending if it needs to. It won't need to. Okay, let's talk a little bit about its its budget deficit. Now, one of the things I wanted to show is because of Israel's strong growth, it's been able to reduce its debt burden despite maintaining budget deficits over the last 20 years. Nonetheless, Israel has maintained stricter fiscal discipline than the United States and most other Western countries. Just to put it once again in perspective, Israel is the only developed economy in the world to reduce its debt burden in the years following the financial crisis of 2008 and 2009, the only one. And it maintained a more modest budget deficit as a percentage of its economy than did the United States and most other Western democracies. Of course, COVID was an exception for every country, including Israel. That's what you see here. In 2020, the budget deficit was about 11% of GDP. Unlike the United States and most other Western countries. As soon as the COVID emergency was over, however, Israel rapidly moved its budget into surplus. Israel entered this conflict with no budget deficit. Let that sink in for a minute. Israel has low debt, a modest budget deficit, and has already proven during the COVID emergency that in a very short period of time can spend as much as 11% of GDP immediately if necessary. So about $50 billion in the course of COVID. And I want you to hold that in your mind, because I think what happened during COVID from a financial point of view is actually a good model to think about what is likely to transpire in the coming 12 to 24 months as Israel fights this war against Hamas. I mentioned that Israel's debt has fallen steadily over the decades, and that's partially been because its economy grew by 4% or more per year on average for more than 40 years. But it's also because Israel reduced the size of its government, it reduced spending, even as it increased its defense budget, which we'll talk about in a minute. Nonetheless, the share of Israeli government spending as a percentage of GDP steadily shrank from the early 2000s up until the COVID emergency. Of course, COVID reversed all that. And as you can see, there was a spike in Israeli government spending in 2020 and 2021. But as I just mentioned a minute ago, as soon as that emergency was over, unlike the United States, Israel rapidly shrank its budget, in fact, shrank it by more, brought it to a lower level as a percentage of GDP than prior to COVID. Israel enters this conflict with significant fiscal discipline and a strong government borrowing situation. Okay. Now that we've talked a little bit about the basics of Israel's government spending, let's just put this picture into a more regional perspective. Because of course, conflicts are fought against enemies. So you need to know how you as a country stack up relative to those that you are fighting or may potentially fight. So we won't cover every aspect of Israel's neighbors or enemies on this chart, but I just want to put a few key facts into perspective. As I mentioned, Israel is a country of 9.7 million people with a total gross domestic product of $525 billion, or GDP per capita of $54,000. You might think of GDP per capita as a rough indicator of average income. So just so that you can also put that number into perspective, $54,000 compares to the United States. The United States has GDP per capita of $70,000. So Israel still to this day is not as wealthy of a society as the United States. On the other hand, Israel's GDP per capita is higher than Germany, France, Japan, Italy, the United Kingdom, and the overwhelming majority of the planet Earth. There are only 17 countries out of 193 that have GDP per capita higher than $50,000 per year. In the history of the planet Earth, that you can count on two hands how many countries emerged from very low levels of income, of GDP per capita, to very high levels of GDP per capita. As I just mentioned, GDP per capita for Israel in the early 1980s was about $6,000 per person. and today it's $54,000. There are very few countries in the world that have ever accomplished that feat. So something went right economically despite 75 years of security challenges and military conflict. Meanwhile, if I compare Israel to Gaza, there are 2.1 million people in Gaza. By the way, let me just make a quick note. It's not 100% clear how many people live in the Gaza Strip or the West Bank. Estimates range widely. I am using the CIA's estimates. I find them to be the least biased, but it's not clear. There's no clear census of how many people actually live in these territories, nor is there clear government statistics regarding GDP or budgets, as you might imagine. So these are all based on estimates from the World Bank and from the CIA. The GDP of Gaza is about $3 billion or $1,600 per person per year. The West Bank, which has adopted a less violent strategy, I want to emphasize, not a non-violent, a less violent strategy, has GDP of about $12 billion or $3,500 per capita. Just so you can put that into perspective, Israel's 1.7 million Arab citizens have an average household income of $37,000 per year. That's roughly similar to what their GDP per capita might be, meaning Israel's Arabs, even though they have incomes lower than Jewish households, and that is obviously a problem that should be dealt with, are more than 10 times richer than your average West Bank Palestinian and vastly richer than your average Gazan. Despite coming from similar cultural and religious backgrounds with similar family structures, Israeli Arabs are on a vastly different economic and financial trajectory than the Palestinians living in Gaza or the West Bank. Now, this might be a good time to introduce just a couple of concepts that I think are widely misunderstood in the West, widely misunderstood. The famous sociologist Max Weber, who lived in the late 19th and early 20th centuries, it's attributed to him the classic definition of a state. What Max Weber says is a state is a government that controls the legitimate military violence within its territory. We are used to that definition in the United States, France, Germany, what have you, meaning a strong state does not have independent armed militia that are allowed to run quasi-mini-states inside their territory. Almost none of Israel's neighbors meet the definition, or at least the full definition, of a state. Clearly, in the West Bank, the Palestinian Authority does not have a legitimate monopoly over military violence. In Gaza, even Hamas has to share that monopoly with other groups like Islamic Jihad. But even more broadly, in Lebanon, Hezbollah is a state within a state. It's a terrorist group that has governmental power over the 1.6 million Shiites living in mostly southern Lebanon. So when Israel thinks about its wars and its conflicts, they are highly asymmetric. The days of symmetrical conflict, whereby vast armies equipped with tanks and airplanes, helicopters, like Egypt in 1973, in 1967, Jordan in 1967, Syria in 1967, 1973, all of the above in the 1948 war. All of these countries were better equipped in those wars with vastly larger military forces than Israel's enemies, such as Hamas and Hezbollah, have today. So in my opinion, it is perhaps even irresponsible to equate the current conflict or even the attack on October 7th with what occurred in Israel's wars of independence, 1967, 1973. Those were wars, those were existential wars where the state of Israel as a state was threatened. Israel as a state is not threatened. It is not an existential threat. Israelis can feel confident that their state is permanent and that it will rise to the challenge and it will defend itself. And what Israel's enemies want to do, as I mentioned in the beginning, is to inject a note of uncertainty regarding the permanency of the Israeli state. But none of these organizations, none of the surrounding countries can even meet the threshold, the minimum threshold of a state. They cannot muster the resources to run a solid economy. They cannot buy airplanes. They cannot buy tanks. They do not have ships of size. They do not have advanced weapons. They are still a threat to Israelis and must be dealt with proactively, we now know. But they do not threaten the existence of the state of Israel, nor do they threaten the prosperity of Israel over the long run. The Palestinians in the Palestinian Authority have always had the opportunity to organize state-type institutions, despite the Palestinians and their sympathizers blaming Israel for the so-called occupation, just like Israelis did under British occupation before the state of Israel was created. The Jews in pre-state Palestine had already organized state institutions and had already achieved a monopoly over legitimate violence before the state was even declared in 1948. The Palestinians have always had the opportunity to do the same. In fact, I would argue Israel would be thrilled, is begging them to, for the Palestinian Authority to get control over all of the various organizations that arise that threaten terrorism and violence. And the reason I wanted to start there is violence towards Israel has kept Palestinians in poverty. And the more violent they have been, the more poor they will be, which is why in Gaza, when in the Hamasistan mini-state that was created over the last 17 years, GDP per capita is half, less than half of GDP per capita in the West Bank. And the West Bank did not do a very effective job of controlling organized military violence, but it did a more effective job. And Israel did a more effective job, is still doing a more effective job in the West Bank. And as a result, the West Bank is more prosperous than Gaza. So let's talk a little bit about the current situation and compare it to the past. And I want to emphasize, when we look back at Israel's wars in 1967 and 1973, perhaps it's easy to forget just how dire the situation was, particularly in 1973. The Israeli economy was in a shambles in the 1970s. Inflation was accelerating. The war was costly. By the time the war ended, Israeli defense spending was 30% of its economy, 30% of GDP. And it stayed above 20% of GDP until Israel signed its first peace treaty with Egypt in 1979. That peace treaty allowed Israel to scale down its defense spending as a percentage of its economy. When you combine that with the economic transformation I talked about at the beginning of the presentation, you can see the trend from the early 1970s until now, where despite increased absolute defense spending, the defense spending as a percentage of GDP fell steadily and consistently until it reached its current level of 4.5%. People forget that even 20 years ago, or even 30 years ago, let's go back there to the Oslo Accords, Israel in the early 90s was still spending more than 10% of its economy on defense. And even as the defense budget grew, because of strong economic growth, the burden fell. And today, Israel's defense burden of 4.5% of GDP is higher than the United States, but only modestly higher than the United States. Now, keep that in the back of your mind, because in a minute, we're going to talk about why it is that, in fact, we now know Israel underinvested in defense. It's been glaringly revealed since October 7th that Israel's defense budget was too low and needs to be boosted, not just for the current conflict, but permanently. And that permanent increase is a burden that Israel can bear and will actually bear fairly easily, as we will show in a minute. It might also surprise many of you listening on this call that Israel's armed forces are smaller today in absolute number of soldiers than they were back in the 1990s. In fact, Israel reduced the size of its armed forces over the last 5 years modestly. Perhaps even more importantly, if we look at the total size in terms of troops of the Israeli army as a percentage of the Israeli labor force, meaning adults who go to work. So just keep this in the back of your mind. This excludes mainly ultra-Orthodox men who don't go to work. So it's not completely adjusted for the demographics of the ultra-Orthodox population, but it is also somewhat reflective of the fact that they don't serve. The proportion of the population, of the adult population, 18 and above, that is going into the army is less than half of what it was 30 years ago. There's just a little bit fewer than 180,000 soldiers in the Israeli army. If Israel conscripted the same proportion of its labor force today as it did in the early 1990s, the standing army in Israel would more than double in size. So Israel's population provides a tremendous manpower reserve that it did not have in the 1948, 1967, 1973 Lebanon War, or even the Second Intifada. Israel has the manpower. Whether or not the Orthodox serve will be a debate for the future, but even setting them aside, Israel has vast manpower reserves to increase its standing army on a permanent basis without even going back to the proportion of the population that served just a generation ago. Meanwhile, you'll notice that, if you remember, Israel changed its terms of service. It reduced the length of service. It had a modest reduction. And if we go back and look at the history of the Israeli armed forces in terms of its size, you will notice that following the Oslo Accords, Israel reduced the absolute number of its troops. It did the same in the early 2000s, only to be reversed during and after the Second Intifada. And keep that in the back of your mind. Israel's defense budget as a percentage of its GDP fell, and the total size of its armed forces declined. And Israel, since the financial crisis, has only increased its defense budget by 1.2% per year, adjusted for inflation, despite the fact that its economy has grown 4% per year. Israel replaced a great deal of manpower with technology, and that has been glaringly revealed, I would argue, as a mistake based on what occurred on October 7th. So it seems highly likely to me that Israel's defense budgets will increase not just for this conflict, but permanently, as will the size of its armed forces in terms of manpower. Once again, just to put that into perspective, if we go back to the 20 years ago, the beginning of the Intifada, there were 2.7 million Israelis in the workforce. Today, there are 4.4 million. And the size of the armed forces is smaller today in absolute numbers than it was then. Meanwhile, there has been a trend towards ever greater participation in the labor force. And the reason I wanted to bring this up is there are a lot of myths surrounding many of the debates, particularly as they evolved over the last year during the judicial reform debate. I do not want to paint a picture of a panacea by any stretch of the imagination, but the trend over the long run has been for greater participation in the workforce by Arabs, by women, by Orthodox women, and even Orthodox men. Coming out of this conflict, I suspect the budget pressures will force an acceleration of those trends. Because, of course, the resources that the government thought could be spent in other areas before October 7th, we now know must be spent once again on defense, and that will squeeze over the long run other budget items such as subsidies for yeshivas and things of that nature. I suspect. I think there will be a significant reordering of priorities in the coming years that will be reflected both in the labor force and in Israel's military, the size of its military. Another feature of Israeli society, I just mentioned, rapid economic growth of 4% per year for many decades. Number one. Number two, rapid population growth, almost 2% per year, also for the last several decades. Just to put that into perspective, population growth in the United States during the same period of time was about 0.6% per year, meaning the Israeli population was more than triple. Population growth was more than triple that of the United States, and that was in all segments of Israeli society. Some grew faster, like the Orthodox, but all segments of Israeli society have rapid population growth, rapid GDP growth, and as you see on this chart, Israel is one of the highest saving countries in the world. It has the highest savings rate in the developed world. Israel's savings rate hit 16% of GDP over the last several years versus 2.5% in the United States. Many years ago, Israel created a system of mandatory savings. Think of the 401k system in the United States, except in Israel, it is mandatory and ranges between 17 and 25% of income. That money is going into the Israeli pension system every month. And if you think about the resources necessary to fight this war, if you say that the savings rate, even look at the savings rate prior to COVID, because of course it spiked since COVID, of about 12% of GDP. That means that there is $50 to $60 billion of fresh capital flowing from Israeli employees into the financial markets every year, roughly $4 to $5 billion a month. Of course, the highest and best use for all of this capital is infrastructure and investment in private sector business opportunities. However, if the Israeli government needs to tap this money and borrow to fight this war, which, by the way, they have already done. They did a $3 billion bond offering last month. They could borrow $3, $4, $5 billion every month if they had to, not from foreign investors, but from their own population. If that isn't financial firepower, then I don't know what is. Let's turn, just for the last few minutes before we get to Q&A, to the Palestinians. The Palestinians, unfortunately, have been the big losers from the violent confrontations since Israel came to won the 1967 war. Many Palestinians work inside of Israel. However, many more used to work in Israel before the various waves of terrorism. In a minute, I'll show you the exact proportion. But during periods of peace and prosperity, Israeli employers tend to increase the total number of Palestinian workers. And then, of course, during periods of violence, like the Second Intifada, the total number of Palestinian workers in Israel drops dramatically, only to come back. And as you can see, before this conflict, there were 180,000 Palestinian workers inside Israel. That is a record in recent years. I suspect that is going to reverse in a major way. It's already reversed temporarily, and I think much of it will be lasting for many years to come. The history of Palestinian violence towards Israelis has been economically devastating for the Palestinians, not the Israelis. Yes, we had the first Intifada. We had the second Intifada. In between those two intifadas, the Oslo Accords, which set up the Palestinian Authority and was supposed to usher in the period of permanent peace, actually resulted in numerous waves of terrorism. Israel imposed what they called closures at that time, preventing Palestinian workers from entering during periods of heightened tension and terrorism. The second Intifada came along and closures tightened and even fewer workers were allowed in. And as you can see, if we go back to the years preceding the first Intifada in the 1980s, 40% of the Palestinian workforce worked inside Israel. Since that time, waves of terrorism and violence have diminished the role of Palestinians in the Israeli economy radically to where they are still significant, but not very significant. It's going to be a bit of a blow to certain sectors and industries, which I'll show you in a minute, losing access to the 180,000 Palestinians working in Israel temporarily, some of which will be permanently. But as you can see, waves and waves of terrorism and violence over the last 40 years have radically diminished the role that Palestinian labor plays inside Israel, sinking Palestinians into poverty. If the goal of Hamas and Hezbollah and Iran is to shake Jewish confidence in the state of Israel as a secure safe haven, to destabilize the Israeli economy, it has worked exactly in reverse. If the Palestinians were, on the other hand, to adopt policies of nonviolence and not even recognition of the Jewish state of Israel, just nonviolence, their standard of living would rise substantially, perhaps not all the way up to the standard of living of Israeli Arabs, which have a higher standard of living than most developed economies on the planet Earth, but nonetheless higher than it is today. Once again, from a sector point of view, the number one area that Palestinian labor plays a significant role is in construction. And that is why the construction industry has been amongst the hardest hit. Our own construction-oriented stocks probably have taken the biggest hit since October 7th. They will recover, but they will recover a little more slowly than other sectors of the Israeli economy because that labor will not be replaced overnight. As one last separate point, Israel called up 360,000 reserve soldiers. It has moved 200,000 people out of harm's way in the north and the south. It has lost a significant percentage of its Palestinian and foreign labor. All combined, about 15% of the labor force that was working on October 6th is not working in their jobs today. If you remember at the beginning of my presentation, I wanted to use COVID as an analogy because at the height of COVID, about 22% of Israel's labor force was out of work. So at the moment, despite the dislocations of the war from an economic point of view, they are significant, but they are not as significant as the dislocations during COVID. And those of you on this Zoom may not remember, Israel had quite draconian COVID social distancing policies that extended for a very long time. So that's why I think that the COVID labor market, COVID-related government spending, COVID-related debt and borrowing is a very good analogy for what the size and scale of the financial commitment required will be. Roughly on the order of about $50 billion, which is similar to the estimate from the Bank of Israel. And Israel has the financial firepower to finance all of this just from domestic savings. It will be terrific if the United States government comes to Israel's assistance with $14 billion. It is also terrific that World Jewry so far has raised about $1 billion in all of its various causes and assistance and emergency campaigns. But to put those two things into perspective, even if they did not transpire, Israel can easily afford to finance both the current military operations, extended military operations if necessary, an expanded war if necessary, and maintain prosperity for its people based on its own domestic capital. Hopefully, it won't need to tap all those resources because, of course, Israel will be in a much better, stronger position if it does not need to tap all of those resources for warfighting and defense, and I suspect they will not. All of this, as investors, has left us in a position where Israel has been put on its back foot. It has been dealt a blow. Hamas did win, from its vantage point, a short-term battle. But the offensive has now, Israel has now launched its offensive. It's going to be expensive, both in terms of treasure and blood. And we are very sympathetic, more so, to the bloody sacrifice that Israel has already made and will make in the coming months. Of course, that is of paramount importance, and economics must necessarily take a back seat to the human lives that are at stake. But Israel can afford its expensive military capabilities because of the advanced nature of its economy, the strong growth it has enjoyed, both in terms of GDP and population. And we suspect, like all conflicts before it, Israel will once again be resilient and bounce back, which is why when we look at the valuation of Israeli stocks today, their significant discounts, in our opinion, reflect short-term risks and negate long-term opportunities. Israel's valuation metrics across the board are half or less than half, in most cases, than the United States and many other developed countries. Israel is selling at very substantial discounts, and as long-term investors, we remain invested in Israel, and we are thankful that you, as our clients, remain invested in Israel with us. To summarize and then open up for questions, Israel has significant financial firepower. Its economic growth is strong. Its savings are high. Israel's government debt is very low. Israel can afford to fight the war and increase defense spending over the long run while investing in prosperity for its citizens, as it has over the last 20, 30, and 40 years. And despite all of those strengths, Israeli stocks at the moment, as you might suspect, are significantly undervalued. We believe that despite the fact that war has come, Israel did not ask for it, Israel does not want to fight it, but Israel is strong and resilient, and Israel will win. I now open it up for questions. Maybe, Amy, if you don't mind, just reading some of the questions.
Can you hear me?
Yes.
Okay. So the first question we have is, how important is high tech in Israel's economy? Is it a bubble?
Great question. High tech is very important to Israel's economy. Just to give you some numbers, you may be surprised to learn that only 12% of the Israeli labor force, only 12% of Israelis work in high tech. So it is very important. It is one of Israel's largest sectors. On the other hand, it is not the only reason that the Israeli economy has prospered over the last number of decades. Despite 12% of the workforce, however, it contributes not quite double, but pretty close to double its share of GDP. So a tremendous amount of value is created in the Israeli technology sector, and it is not a bubble. Why? Because it was a bubble. Just like the American technology sector was in a bubble during the pandemic, valuations were high, tremendous amounts of capital were flowing in, IPOs were booming. However, when the United States raised interest rates starting in 2022, that bubble crashed, both in the United States and in Israel. Then Israel added insult to injury with the judicial reform debate, which further diminished the capital flowing into the technology sector. Despite the significant reduction in total venture capital flowing into technology, and frankly, total capital even in more mature technology, that's what we invest in, more mature companies, including technology, even with the substantial reduction over the last 2 years, the total amount of financing, of capital flowing in the technology sector actually exceeds the long-term average over the last decade. So Israel the bubble has popped, but actually, despite the war, it has not gone to zero. On the other hand, I do suspect that it will continue to fall until there is a clearer resolution to the current conflict.
Okay, the next question. Thank you, Brian. I'm going to rephrase it a little bit because it's somewhat of a comment, but I think you can answer to what is the risk. Iran is funding its proxies. So basically, many of Israel's enemies can get as much money as they need. And their technology has also advanced. So what is your opinion on that part? And by the way, I need you to put the last slide with a disclaimer so we don't get in trouble.
Oh, okay. I will do that.
And if it's for a minute.
There we go. Sorry, the lawyers, we need to make sure we have that up there. The way I would phrase this is, on that chart that I showed a minute ago, in fact, now that I've showed you this disclaimer, maybe I will go back to that chart. Pardon me. I want to put Iran and Israel's other enemies into perspective in order to address this question. So let's think about what the Israeli defense establishment needs to think about. Because Iran is a current enemy, but even though there's a peace treaty with Egypt and Jordan, those countries are not completely stable. So as a result, if you think back to the Arab Spring, the Islamic fundamentalist parties won 75% of the vote back in 2012 before the military took control. Why do I start there? Because Israel faces an extremely fluid situation. And it's a highly asymmetric situation. It has to pay attention to the enemies it can see, to the enemies it can't see, and countries that may flip. Iran, you might remember, was an ally of Israel up until 1979, until the Islamic Revolution, and overnight flipped from an ally to a threat. So Israel must always be cognizant that its current allies could tomorrow be threats. So that's why when we look at the broad scheme of its economy and its military power, it rests on that fundamental base. Israel is the only industrialized economy in the Middle East. It's the only one with a robust domestic production capability, which is why when we look at Iran, Iran has 89 million people, but a GDP of only 389 billion. Israel's GDP is larger than Iran. Egypt has 110 million people, and Israel's GDP is higher than Egypt's at 477 billion. It gives those countries like Iran less capital to work with. Now, Iran, of course, has an asymmetric advantage relative to Israel. That is, it can stretch its money further. So Iran cannot afford to buy F-16s or F-35s. Iran cannot afford to buy advanced submarines or build advanced submarine, anything that requires capital to buy foreign technologies, know-how, anything that they have to buy on the world market, they have very limited resources, which is why they have defaulted to this proxy strategy, because what they can buy are people. People in Iraq, people in Syria, people in Lebanon, people in the Gaza Strip are very cheap. Syria, because of its civil war, is an extraordinarily poor country today. Lebanon, an extraordinarily, in fact, this data is not even relevant because of the recent economic collapse in Lebanon. For just $100 a month, most likely Iran can buy proxy soldiers all over the place. So when it links up with its religious allies, with its regional partners, it does not take a lot of money for Iran to put together its proxies. But it does take a lot of money to equal the capabilities that Israel now has, and they don't have the money. So as long as Israel can maintain its economic edge and its qualitative military edge, Israel will be able to secure itself despite Iran's investments in its proxies and in its inexpensive military technologies, such as drones and somewhat less capable missiles, etc. I do not want to minimize the threat. Israelis as human beings are at risk. But at the moment, Israel, particularly if it steps up its game, will be able to once again establish defense and deterrence, and I suspect go on the offensive against Iran and its so-called axis of resistance. I'm not sure if that addresses the question, but
I would say yes. Thank you, Brian. The next question, and I have somebody that raised their hands but has not presented a question, so I sent a direct message to that person. Hopefully he'll send us a question. But the next one is, what do you see as the prospects for Israeli equity markets in the next few months, before the end of the conflict and coming out of it, hopefully soon? Are domestically listed Israeli stocks trading at bargain valuations? So you mentioned a little bit before.
Well, maybe the way I'll approach it is, fortunately, we did not need to send out our statements to you in the first few weeks after October 7th, because in the initial shock of the massacre, the initial shock of the terrorist attack, both the equity market and the shekel fell. And at one point, from October 7th to its low, our portfolio fell more than 20% just in that short period of time. Then, perhaps even more surprisingly, in the last few weeks, both the shekel and the Israeli stock market rallied in a very significant way. So we are still below where we were October 7th, but we're only about 5% below as of today. So I don't know where the Israeli market will be over the next few months. I suspect that it will be volatile, and that it will largely depend both on the circumstances on the ground, both in Gaza, and whether the conflict spreads more widely, as well as what goes on with interest rates in the United States. Because despite all of the drama, all of the activity and military activity in Israel, actually, the dominant factor over the last 2 years has been first the rise in interest rates in the United States, and then more recently, over the last few weeks, the dramatic decline in long-term interest rates in the United States, which I believe played a very large role in the rise of the shekel and the recovery of the Israeli stock market. So there's a complicated brew, a complicated mix of factors that are creating volatility in the Israeli markets. And I think that the war is certainly an important one, but not the only one. So I would not predict what will happen in the next few months. But what I will say is if I look at the long-term future and compare it to Israel's long-term past, I suspect back at the dark days of the Second Intifada in 2002 and 2003, nobody would have predicted that coming out of that period of time, Israel would see very robust economic growth for 2 decades, a significant expansion of its capital markets, strong returns, and one of the strongest currencies in the world. I can't tell you for sure that that's what will happen this time, but that's the way it typically goes when in Israel, which is why I say they are resilient and will recover.
So I'm going to put 2 questions together, Brian. One, you responded just now, but I want to acknowledge it, and you might be able to add something. But the first one is, what is your sell discipline for the fund in this moment? And the second one is, in general, what have you seen in terms of how long do recoveries take after wars?
Yeah. Okay, great questions. So we sell really for 2 major reasons. One is valuations that exceed our benchmarks, meaning if valuations get stretched, and that was the main reason we were selling back in 2020, 21, 22, tying it back to the question about the bubble, that we had some stocks, particularly technology stocks, that were doing quite well, and their price to earnings ratios, their price to cash flow, other metrics of valuation exceeded what we considered reasonable, and we sold. We are not blessed with that problem today, so that is not a factor. The second reason would be deterioration in long-term business fundamentals. We have seen a deterioration almost across the board in Israeli domestic companies in their short-term fundamentals. How could you not? However, the deterioration has not been equal. We have a heavy investment in financials, not much deterioration so far. We have technology. I would argue there has been some deterioration, but that's been more related to the global economic picture. Really, the 2 areas where we've seen the most significant impact are in construction and real estate, as I just mentioned. That's to be expected. The labor force has evaporated in some cases, not the opportunity, but the labor force. And then consumer, some of our retail holdings, partly because the labor force was mobilized, partly because consumer spending took a big hit. In fact, the Israeli credit card companies reported that total credit card transactions in the first 2 weeks after October 7th fell 20% in 2 weeks. That's a massive shift. They have been rebounding, but they still are 6% below their October 7th level. So we're clearly in a consumer recession, and some of the companies are facing just short-term deterioration, in which case we will not sell them, but others that are experiencing some longer-term deterioration because of the current situation, we have already sold.
Thank you, Brian. The next question is, I keep hearing that over half of Israeli citizens are under the poverty line. Your thoughts? Large disparity between rich and poor? Hard to buy a house or a condo?
So firstly, half is a widely, I don't know where you heard that number, but that's widely exaggerated. So first of all, what is poverty? It depends on how it is defined, right? So the poverty line in Israel is roughly, you can think of it just to keep focus on it, the bottom 20% of incomes. Now, the average Israeli is poorer than the average American, but the average Israeli is wealthier than the average person in a whole variety of countries, much wealthier than people in, certainly in India, China, Mexico, by a very wide stretch. They're even wealthier than people in more developed economies like South Korea, Taiwan. So the average human being living in those countries, in some cases, has a lower income even than people living in the poverty below the poverty line in Israel. So we really have to keep that all in perspective. Now, there is inequality. The poverty in Israel really shows up in two major subsegments of the population: ultra-Orthodox and Arabs. That's where you see disproportionate poverty. The ultra-Orthodox, in many ways, are poor by choice. The Arabs have both historical, cultural, sociological reasons for higher poverty rates due to the structure of their families and clans, but also some discrimination, of course. We don't want to deny that. But despite the fact that there is more poverty in those two subsegments of the population, the trend is actually quite good. I just mentioned that the labor force participation rate of both segments of the population are rising rapidly. If I were to show you what the average income of the Arab-Israeli sector was 20 years ago, it would have been radically lower, with many much higher percentages living in poverty. Today, they have seen one of the fastest increases in their standard of living on the planet Earth when you compare it to other countries and their development, including China. The Israeli Arabs have grown their incomes and their well-being much faster than China as a country. So that's an important thing to keep in mind. Inequality is part and parcel of free market development. It will always be there. The question in my mind is not whether poor people are getting poorer while the rich get richer. That is not what's going on in Israel. What's going on in Israel is that the rich people may be getting richer faster than the poorer people are getting richer, but the entire society is getting richer, wealthier.
Thank you, Brian. Israeli Ambassador Ido Aharoni expects this current war to create double-digit inflation in 24, 25, and 26. Do you concur? And if not, why? And if so, how will that affect your investment strategy?
Yeah, great question. I happen to put, I believe, okay. Here's the Israeli inflation rate since the second Intifada. And you can see that since the financial crisis, Israel's inflation hovered between, well, zero, a little bit below zero, in fact, and 2% the entire time until COVID. And COVID, just like in the United States, we saw a sharp spike in the inflation rate. Now, why did Israel experience the inflation spike? Well, it's the same reason we did as well. There was supply constrictions, meaning we shut down a lot of industries, we sent people home from work, and at the same time, the government ramped up its spending to support those people who weren't working. Israel's got to do the same thing right now. So yes, I suspect that there will be a spike in inflation similar to COVID. Now, one thing to keep in mind is, number one, the Israeli inflation rate peaked out at roughly half of the American inflation rate because Israel spent a little bit less and printed less money during COVID. Guess what? As big as the situation is today, they're actually spending less money than during COVID, at least so far, and probably will spend less money. But even more importantly, they're not printing any money. Israel did not lower interest rates in response to this crisis, whereas it did back in COVID, it lowered interest rates down to 0%, did all of the same monetary stimulus like the United States, meaning printing money. Israel is not printing money this time around, very far from it. Israeli interest rates are a little bit below US interest rates, but not much. The Bank of Israel benchmark rate is currently 4.75%, very far from the 0% coming in and during COVID. So I believe there will be an inflationary spike, but it will likely be smaller and shorter than what the COVID spike was, depending on what happens with the length and breadth of this war.
Thank you, Brian. The next question is, the Israel Innovation Authority and several other startup funders in Israel have been aggressive without much due diligence in their financial support to startups, with less than 10% of Israeli startups being long-term successful. How long can that continue? Yes, I'm CEO of an Israeli medtech startup.
Well, I guess what I would tell you is startup investing is risky, and there's a very high failure rate, which is why we at Israel Investment Advisors don't do it. We operate at the much lower risk end of the spectrum in public markets. I would say what's going on in Israel today is very mature. It's very similar to what goes on in Silicon Valley in the United States. We've had many, many cycles of technology boom and bust. In fact, that chart I showed you about this second intifada between 2000 and 2004, what I didn't tell you was, yes, there was a downturn in the Israeli economy. However, economists have studied that downturn and have come to the conclusion that actually the biggest factor in the downturn was not the second intifada, was not terrorism. It wasn't the lack of security. It actually was that the NASDAQ bubble burst and all the capital dried up for a number of years. And if you go back and look at the Israeli tech sector, it has very much followed the exact same cycle as the American technology sector, with very similar risk and return dynamics. So I suspect that there's going to be a shakeout right now because capital is dried up. I suspect more capital will dry up because of the conflict. But Israeli technology companies have many generations behind them now. There are companies that we own in our portfolio that are worth billions and billions of dollars with very robust profits, all the way down to companies we don't invest in, startups, many of which will fail because they always fail. And they always fail in higher numbers when the tide rolls out from the capital markets, and the tide's rolling out, but the tide will roll back in, which gets back to the question I forgot to answer previously about how long it takes to bounce back. Actually, the Israeli economy tends to bounce back very quickly because, as I just mentioned, global factors tend to be more dominant even during periods of war and conflict, certainly over the last 30-something years. And right now, the U.S. seems that we're at peak interest rates, that inflation is cooling, the global economy may start to come out of its funk in the next 12 or 24 months, and I think Israel will respond as well.
Thank you, Brian. I'm going to redirect you a little bit to a previous question. So on average, roughly, are you able to tell us how long do investors need to wait after a war in order to reap the benefits of a recovery?
There's no way to have a general answer, because if we go back to that first chart, in fact, the Israeli economy and financial markets barely went down in any of those prior operations since Hamas took over in 2007. Even in the second intifada, where there was about 3 years of decline between 2000 and late 2002. Well, guess what? That's exactly the same in the United States. So I would tell you that this is a very different conflict. This is going to be longer. It's going to be more methodical. But what I will say is, I suspect, as you are already seeing, that Israeli security has already been enhanced by the proactive nature of the ground operation. So if Israel can keep Hezbollah at bay, then we will get more rapid recovery. But I could also see Israel taking the proactive initiative to go after Hezbollah. Because we now know you cannot let a terrorist entity exist on your border. So I don't know where Israel will go of its own accord. But I do know that the length of this operation will be longer than any of Israel's previous wars, except for its long involvement in Lebanon. In fact, I think Lebanon may be a good analogy in terms of it's a long-term permanent situation. So it will have to evolve into a management situation at some point. So that does not adequately answer your question because I really don't know. But what I will say is I strongly suspect that if we fell asleep today and woke up 5 years from now, based on Israeli valuations and the history of its conflict, the Israeli equity markets will be very substantially higher then than they are now.
Thank you, Brian. The next one is, how much does someone have to put into your into the fund to join? And since that question ties with the next one is, what is IIA particularly doing in response to the situation today?
So ever since we started the fund, we had a minimum in our offering documents of $100,000. We never changed it, even though the overwhelming majority of our investors have substantially more than that invested today. We actually had been discussing raising our minimum before this conflict, and now we're not going to do anything. So that's the way it sits. But we appreciate everybody who has invested with us, and we certainly appreciate those who are sticking with us, which so far is everybody. And we believe that our fund will be as resilient as Israel, if not more. What are we doing as part of this conflict? So there's what we're doing as a business, obviously, and then what we're doing as people. As a business, we are in contact with all of our portfolio companies. In fact, it's been very interesting and instructive to be in communication with all of them regarding what their contingency plans are for this situation. We've talked about this theoretically over the years, and it's interesting to see it all, just how well prepared most of our portfolio companies are. In fact, we called for the portfolio companies we have in the financial sector, we called and asked, is there anything we can do, either in our own small way with our own employees, or frankly, to help here in America to fill the gaps that they may have in staffing with accountants and financial people and spreadsheet jockeys and things of that nature. And they told us, thanks, but no thanks, we're ready. So I was very encouraged by that response, and listening to many of the contingency plans, I've been very impressed. Of course, there are some companies in certain sectors that there's just no way to thrive at the moment, and mostly that's in retail and consumer related industries. As people and even as a company, we do what we can do as Americans at a distance. We are not mobilized for war. We don't have children that are going into the army, but we do have financial resources. We do have the ability to channel those financial resources. So that's what we're doing, just like probably many of you. We're making donations to the various organizations, the emergency campaign, and frankly, we're open to ideas and to our friends. We have many friends that have sent, just like all of you, sent all the various requests for their units, for their communities. We have lots of friends that live in the Gaza envelope, which a lot of people are now calling the Israel envelope. Supporting them directly. There's been GoFundMe type campaigns. That's what we're doing as people. But we're certainly open to ideas if there's any good ideas out there for how we can do something that might be helpful.
We're approaching the hour and a half, which is what we had planned originally. So I'm going to give you a last question. And after that, I'll let you just close us for the day, Brian. So what is your opinion on the reported terror funding of Charles Schwab and Fidelity? Do you check out your companies for their funding practices?
You know, I saw that article myself just today. And to be honest, I have not dug too deeply into it. I strongly suspect it's overstated by at least a mile, if not a million miles. The Charles Schwab and Fidelity have what are called charitable gift funds, and many of our clients use these charitable gift funds. You might think of them as just, you know, your own holding bucket in a donor-advised fund to channel your own money to your own giving priorities. And as long as it's a legally registered 501c3 in the United States, I've never had either one of those charitable gift funds deny a transfer. Nor do I believe they do their own due diligence, but don't quote me on that. I think any charity that's in good standing, a client of Schwab and Fidelity, will facilitate the donation in the same way that they facilitate the donation to Jewish and pro-Israel charities. So I would not be totally surprised if charities that that are insidious have snuck their way in to that flow of donations, just as they have done in America more broadly. I don't believe it's Schwab and Fidelity's job to know every in and out, but I do believe it's the job of the American government to stay on top of that and certainly let Schwab and Fidelity know if there is a problem. Having done business with these two companies, I seriously doubt there's any conscious and or even unconscious channeling of funds, but there may be accidental channeling of funds on a very small scale. If it turns out to be very different, we will respond and adapt like everybody else.
Brian, will you put the last slide where we have our contact information for those that may need it for after the webinar? And also, I wanted to mention that this is being recorded, so we will be sharing this recording with every attendee, and feel free to share it.
Thank you. Thank you for investing with us. If you're a guest, thank you for joining and listening to us. Obviously, it's been a difficult time for all of us, and the difficult time, the least of the difficulties are the problems in the financial world and with our fund. It's our duty, it's our fiduciary duty to manage the fund the best that we can so that you have a positive economic outcome. But of course, the most important issue in Israel and for us are the lives at risk, the security of the state of Israel, and the outcome of this war. We hope and pray that Israel will be successful, that peace will come, that casualties and deaths will be minimized, and we hope that our fund prospers along with Israel in the coming years, and we think it will. But that is not our priority in our hopes and prayers, although it is our priority in our day-to-day work.
Thank you, Brian. Thank you for everybody that came. We received a few comments thanking us for doing this. We want to help and we want to be available for any questions in the future. Take care.